What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 28th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got a big topic to talk about, not only in the sense of price action, as Bitcoin charted from 19,000 up towards 20,000, where a lot of people started to get optimistic about where price could go over the coming week, yet again, rolling over those gains here back down to where we started due to a major macro event. And this is the leak in the Nordstream 2 pipeline, one of the major natural gas pipelines into Europe that provides energy for the European Union. So we need to talk about what this is, why it's a big deal, and on top of that, how it's going to be having a major weight on financial markets and why this is likely not good for Bitcoin. So we've got a lot of things to talk about. Let's go ahead and dive into it. Now, I know a lot of you are thinking, Nick, what does the macro environment, or better yet, more specifically, a leak in a gas pipeline have to do with crypto? It obviously not only sucks for the environment, but on top of that, why is it really bad for Bitcoin? Well, it has to do with the broader macro perspective of what's going on in the world and how that is going to impact capital flows into the crypto market. If we don't have people with a lot of disposable income, if we don't have good times, if we don't have easy credit, speculative assets like crypto, whether we like to see them as speculative or not, they're still early stage assets. It is still an emerging asset class as a whole. What we may think is great is still very far out for a lot of people in the world. And because of that, it is not going to do well in an environment where we have the opposite. We have restrictive credit, i.e. a restriction in the credit or monetary supply in the economy. When we have uncertain times when it comes to the cost of living, right? Less disposable income, high rates of inflation, and to make matters worse, geopolitical uncertainties. This is not going to build a favorable environment for Bitcoin. And what a lot of people got excited about yesterday, as with each and every bump up in price, I know a lot of people think I'm being too bearish here, and I understand, guys. I love crypto as much as the next person. I've been covering crypto here in this channel for the last 5 years. As much as I love crypto, I'm in cash for a reason, because right now the trend is clear. The macro environment is uncertain, inflation is running high, and the Fed is at the driver's seat, trying to cool inflation with high interest rates and quantitative tightening. And whether or not we think the Fed is doing the right thing or the wrong thing, we need to understand what it's doing and how it's going to be impacting asset markets, because what we just saw over the last 24 hours is a typical fake out here. We've rolled back over here, we've got a tall wick here, right at the lows here. Now I want to emphasize what this means here for Bitcoin, right? We're going to go ahead, just analyze the price, get away from the volume chart here. You can see that over time, we're having lower highs, significantly lower highs here back since we took profits here back in early August during the relief rally, because the macro environment is still growingly uncertain here. And with a daily close like this, we are very, very close to potentially getting a full-scale breakdown here. Now again, I want to make it very clear, I didn't know that the Nordstream leaks would happen. Trust me, if I did, probably wouldn't be here on YouTube talking to you guys. But the major thing I really want to emphasize here is a little bit of details around what we know about this event, and on top of that, what this likely is going to mean for the macro environment and geopolitics of the situation. So we can see that this has not only put a weight on Bitcoin, it's also put a weight here on the S&P 500, on the NASDAQ, and it's got a lot of people concerned about where things are going in the geopolitical space when it comes to the war in Ukraine and the tensions for Europe and Russia, as well as the United States. So this photo here was taken from a Danish F-16 near Bornholm. So this is one of the areas where one of the major leaks have occurred here, taken by the Danish Armed Forces. Now, from the details that we have here, we've not only confirmed with images and video from the military itself that this is a real leak. This is not some conspiracy. It's not some kind of internet gaffe or joke. There is a real leak in these pipelines. And Nord Stream 2 plays a major role in supplying energy to Europe, right? So we need to understand that this is likely going to have an impact on natural gas and oil. It is going to make these resources more scarce, so that inflationary pressures are probably going to get even worse in European countries. And I'm not just saying this from an outward perspective. I live in Europe at the moment. Right? I'm originally from the US, but I live as a resident abroad in a country within the European Union. So we need to understand here that this is going to be even worse than what we've already been seeing. We've been seeing energy prices start to cool down over the last week or so as they had gotten to really exacerbated levels. But with events like this is going to make energy even more scarce for these markets and is going to have a weighted effect on the global price of oil and natural gas. And we haven't seen a major move yet. And this is where I find things quite interesting. If we take a look at oil here, or we're taking a look at CL1, exclamation point, this is the light crude oil futures, the most current contracts in the futures market. We bumped up here a couple bucks. I will say though that this is not something that again is speaking to real pandemonium and fear just yet. And on top of that, natural gas, if we take a look at the weekly, still relatively neutral here. Take a look at the last 24 hours, practically neutral here with where we've been back over the last few days before the markets closed into the weekend. But we did see a sizable bump here within European futures. And I would not be surprised that we not only continue to see an increase here in the futures just for the European market, but also for broader commodities as growing uncertainty comes around these events. Because if Nordstream is going to be off for the next couple of days and weeks, as has been stated here, it's basically going to take at least a week, the Danish minister stated, for this to come back online. This is going to send energy prices up big time. We are going to either need to see energy transportation from the West, which is already at pretty much maximum capacity, from my understanding, or gas-based transportation or railway transportation to make up for this. And if not, if they are already at max capacity and we cannot supply for that or no one else can provide to meet in those gaps, then this is just going to be incredibly bad for energy prices. Again, I don't mean to be negative, right? I think this is not just something in the short term that we need to be worried about. What this speaks to is growing geopolitical tensions, not softening tensions. I know you'll hear a lot of different things from different people because it's a very heated topic about how the war is going, who's winning, and essentially who is going to be victorious in the end. I really don't know how things are going to turn out in the end, to be quite frank with you guys. I remain a hopeful optimist that the world will be able to work itself out, that people generally want to get back to a time where there's no tensions. But I have to say, when we are investing and trading in these environments, until there is a clear, decisive signal that the trend is ready to reverse, that the world is coming back more towards more peaceful, more predictable times, we cannot try to buy every single dip, and we cannot get excited after every single bump in price. This is why I've been so gun-ho since back in August. And as we talked about in the last market update, you guys know I talked about the concept of not getting caught 2 steps behind. We were definitely a little bit behind on calling the bear market for sure when we were hoping for the 30K support range for Bitcoin. But we took advantage of the relief rally into $24,000, $25,000, and we got out into cash because we predicted that things are going to likely get worse here over the next few weeks and months. If you guys want to see some of my thoughts on this, you can follow me on Twitter, but I want to kind of stay tuned on this topic here. Now, we don't know exactly how this pipeline leak happened, but we have got growing confidence from a variety of media sources, not just Twitter pages like Zero Hedge here, but real media sources, that this was deliberately conducted, that this was a sabotage event. And we don't know exactly from who. There are definitely some rumors going around. Some people are saying that the Biden administration back in February and January had hinted that if there was an invasion of Ukraine, that this would be essentially, it would be possible to shut down Nord Stream 2, or that it would not continue to move forward, quote unquote. So again, essentially a means of gutting Russia's major revenue stream, benefiting from high commodity prices, and therefore having additional revenue to expand its operations for its military and army. But again, a lot of people also arguing that this may not be a good benefit here for us, because while it might hit Russia on its revenue, it is also going to jack up energy costs for Europe, which again is one of the growing concerns here, and also energy costs for everyone across the world. So we have no further confirmation of this, and I'm not one again to speak too far out of tune. Another one as well, one of the big hot headlines here, again, we're getting a lot of this information still kind of breaking at the time, that supposedly the CIA had warned Germany of a possible Nord Stream pipeline attack here back over a few weeks ago. So there is still a lot of rumors speculating now, but I want to be very clear with you guys, we don't have anything that's finite or certain. And that's my major point I want to drive here. That if we're talking about our investment thesis for crypto, while I love you guys tuning in on these daily updates, while we are going to be covering opportunities not just in crypto, but on top of that in equities and what's going on in the commodity space and Forex markets, if we continue to see assets rolling over like this, no clear trend reversal, right? If we continue to see the S&P 500, the NASDAQ rolling over, if we continue to see Bitcoin going down, if we continue to see the dollar index chartering up to new highs here, I know a lot of people got so excited that, oh, finally we had a red day in the Dixie, but look at that, completely recouped. When you start to see currencies like the Japanese yen, where their central bank is forcefully, after accumulating dollars for a long period of time, forcefully dumping dollars on the market to try to defend its currency value. And within a matter of 2 to 3 trading days, the market recouping those losses in the dollar back to practically new relative highs, the highest levels we have seen in a matter of decades, over 24 years. And this is the kind of environment where people are just saying, buy the dip, heavily dollar cost average. I got to be honest with you all, this is looking a lot more like a 2008-2000 event versus a typical 15-30% recession in equity markets. Buy the dip, the Fed's going to come to the rescue. Got to tell you guys, honestly, I don't think the Fed's going to be able to come to the rescue. And on top of that, they're going to be the biggest driver of why asset prices are moving lower here. They need to stunt global demand for oil and natural gas to bring back equilibrium, lower prices, and cool inflation. That is their clear, focused objective here. Currency markets are speaking to this. Bond yields are speaking to this. Mortgage rates, which we talked about over these past few weeks, are telling us this. All of the more efficient markets predicting where things are going, where the Fed is going with monetary policy, are screaming that things are going to get worse before they get better. And I know that that is not easy to face, but it's something we need to consider. And that also brings us into the conversation of altcoins here. A lot of people are asking, Nick, I didn't sell Ethereum into the merge event. I was hoping to, kind of ride it into the event and benefit from it. I was hoping that this was going to be the make or break moment where we start a new bull market. Is it time to essentially sell? And to be honest, we talked about it for weeks back in August that this was a buy the hype, sell the news event. It's very typical. We lived through it. The only reason I hold such a strong opinion on it, guys, with such confidence is because I've seen it 2 or 3 times, and on top of that, I've gotten burnt by it before. It's something I can relate to a lot of people on. I only got to the position I am here today talking about financial markets, although I'm not perfect by any means. I only got there because I learned through a lot of experience in crypto and in equities. You cannot get caught up in hopeful rallies during an overall bearish trend. And we are still highly elevated here for Ethereum. I think we've got a good chance to see Ethereum go down a whopping 43 to 42% from where we are right now for a full 53% correction from the recent relative highs back in September. I think that that is easily doable because we have seen that in traditional bear markets. Ethereum should be at a much lower level here, even with the excitement around the merge. And if we take a look at altcoin dominance here, altcoins have been gaining since back in June on their dominance. Bitcoin, Ethereum, and the broader stablecoin markets have lost dominance during this period of time. That is not a sign of capitulation. Capitulation is when you have the already thinly traded altcoins that trade at much lower levels of volume and much higher kind of PE multiples or fundamental, valuations per their actual fundamental value in use cases. Capitulation is when those coins start to drop another 50, 60, 70% when you least expect it. And history has shown us that that is easily doable here. Now maybe it won't drop back down to where it was in January, but at a minimum, it should move up towards a higher level here for the dominance of these coins, at a minimum up towards around 80 to 84%. Now, even though we are going to talk about the fearful, we are going to talk about the potential realities of what might come in the future for the valuations of assets, we love to find great dip buying opportunities. We want to take advantage, strategic advantage, of when we get discounted opportunities in the crypto space. And there's a lot of different plays that I'm already starting to build up on my radar that I think are fundamentally exciting, that are ones to watch, and could be a huge play going forward in the next bull market. You got to be preparing months out in advance to find those kind of plays and look for the setups that look exciting. And one of those plays that I think is really exciting on a fundamentals perspective is Kava Network. Now, if you guys haven't heard me talk about Kava, they're our sponsor here, one of our long-term partners on the channel. We've been following Kava as far back as 2020, and it's been exciting to see how the protocol has evolved, especially with the launch of its own core Layer 1 network that integrates both the Ethereum virtual machine, which a lot of alternative Layer 1s also use, but also integrating it in with the Cosmos SDK, allowing for two of the most powerful Layer 1 protocol developer ecosystems to merge into one single liquidity. And they've already gotten over 31 protocols deployed in a launch, bear in mind, that has been within a bear market. I think this is incredibly telling. And they've got another major protocol that just joined the cavalry here in the Kava network, and that is Sushi. Sushi 2.0, as many of you guys know from the Sushi Swap protocol, has been deployed live on top of the Kava network. This is incredibly exciting news from a fundamental value perspective because Sushi is one of the most liquid decentralized exchanges, one of the most reputable brands in the DEX space, and it's exciting to see these kind of moves here on Kava network during a bear market. I like most projects that are building in a bear market, that are consistently deploying, and don't care so much about what the market's doing or what token price is doing at the given time. They care much more about building community, getting people excited for what's possible, and merging these two exciting ecosystems into one network. And if you guys haven't heard already, the Kava 11 Liquid Testnet giveaway is launching pretty soon. This is going to be the testnet to test the new ability to take your staked Kava tokens or bKava tokens, essentially be able to utilize them within various DeFi protocols. So you can put your money to work elsewhere while you're getting staking yields. And if you're interested in that, you guys can join the giveaway. It's going to be within the next 48 hours. So if you haven't already, follow them at Kava_platform on Twitter. I'll leave a link down below in the description where you guys can join to enter in the 10K giveaway. And on top of that, you guys can follow them, keep up to date with some of their updates. I think they're a very exciting protocol. They're up there with some of our other partners here like Radix and a few other protocols that we're really excited about going forward into the next bull market. But to close things off here, guys, again, wrapping up here in the conversation, I want to go ahead and take a look at equity charts just to close things off. I really think we need to not look any further than what's being shown in the S&P 500 and the Nasdaq after the very clear relief rally here that we saw back here in August that we again talked about a lot on the channel. I'm not trying to beat a drum here or beat a dead horse. I don't want to talk about how we were right on this. We've made some wrong calls in the past year, guys. What I really want to drive here, and just ask you guys again, don't care so much about my opinion. I want you to take a look at this chart here. Draw off any drawings. Just kind of look at this here. When you look at this here, you look over the last decade where we've had some dips along the way for sure. We had the March 2020 sell-off. We had the bear market, short-term bear market in 2018. We had the scare. I remember trading this back in 2015, the commodity crisis, and the popping of the Shanghai Composite in 2015. Got the bear market and flash crash here in 2011. A lot of people were spooked back then. Does this look like a typical bear market rally? Does the macro environment feel like a typical 15 to 30% correction, or does it feel like something worse? Does the chart look like it's telling us something worse? I gotta tell you guys, the chart doesn't look good to me. And I gotta be honest, I don't care if the stock market would pop up 3% tomorrow, if crypto were to pop up 10%. I don't mind paying a premium. Because right now my job is to protect my capital as a trader and investor. And much like many of you out there, I've benefited greatly from investing in assets over the past 10 years. Actually, over the last 11, 12 years, roughly speaking, in my investing journey. Benefiting from this exuberant secular bull market that we had been in. But I think now we have come to a clear end because the Federal Reserve can no longer come to the rescue. And we need to understand that when we come up with our investing thesis. So, anyways, guys, if you liked my rambling, I know I went on long. If you enjoyed it, drop a like, consider subscribing, hit that bell icon so you don't miss another update here on the channel. And if you guys are interested again in Kava, check out the link down below in the description. But I'd love to hear from your guys' thoughts in the comments down below. Let me know what you think. I want to get a discussion going. You agree or disagree, it's totally fine. I want to hear from you guys. But until the next update, thank you all so much for watching. I'll see you all in the next one. Take care, everyone.